Hello, my name is Alex Berkowitz, coming to you on November 13th, 2010. We'll start today's video recalling last week's video when we discussed what might be happening this last week with the markets, especially speaking about the E-mini S&P 500 and the euro currency. Let's go to that quote video, please.
This bull channel we've been riding for a long while is showing that the price is at resistance level. This means that we could definitely still have a correction taking place to meet the support line of this channel. Every indicator you will take a look at shows overbought condition. We just timidly pierced our way through. Just getting a correction starting Monday would bring us back down below this gray level, below this double top. And that is why what seems to be happening now. We're going up endlessly. That does not mean I'm expecting a bear market. That does mean I'm expecting a correction. We are next to hit an important resistance area that will be, depending on the time when we hit that point, will be around the 145 level. And let's see, we start a correction right next week, and we just go down a little bit. It'll take a little longer to get to that resistance level.
Okay, this is the E-mini S&P 500 daily chart. We can watch in this chart the resistance level mentioned on November 6th video, quoted a few minutes ago. There's a green bar at the top of the channel, was Friday, November 6th bar, after which we had this correction and the further sell-off starting on Monday through Friday, November 12th. As a correction itself, this is a minor, very minor correction so far. However, the story is not over yet. We are hitting support of this channel, and there was no signal of reversal by the end of the session. Price closed very near the lows of this bar, letting the price poised to some more downside on Monday. Of course, I do trust channels, but in this case, there is no signal on this bar on Friday 12th, 2010 that the price might be bouncing off and reversing to the upside on Monday. We all know that could happen, but there are no signals on the screen, and that's what I'm referring to. Now, as a correction itself, just a 5-session correction is a tiny, very small little correction taking place. As you can see right here, it is not even matching any important Fibonacci level. It's not even reaching the 23.6%, which would be a very minor correction. That kind of correction would take us directly to the 1181 level, which has not been even approached today. The next level to consider would be 38.2, the third one 50%. That 50% would take us to 1131 level. And that 50% of $1131 is a very important point of reference in previous benchmarks, as we did have some previous resistance which could now become support level out of this correction. Now, breaking that 50% retracement down to the 61.8, which is a very regular Fibonacci retracement, would definitely jeopardize our uptrend, considering that we would be taking out the previous high, which is matching the 1131 level, and also the 50% retracement we were talking about seconds ago. That 1131 level is especially important since we got below it on May 15 or May 18, 2010, and it took us 4 months to get above it. So we would definitely not want to get back below that level again. But back to price action, that would be stretching things too much at this point. We're still holding support of this channel at the 1195 level. We did not break out of this channel to consider another possibility at this point. The first few sessions next week will be crucial to see if we are breaking out of this channel or if we are just bouncing off support level and keep this rally up. However, as a correction itself, this has not been a real correction taking place. It's just been a couple of days, just 3, 4, 5 trading sessions pointing down with an upward channel. So I would not be surprised to get some more down move here on. Now let's go to the Euro daily chart and see what happened with that also expected correction. Okay, this is the Euro US dollar spot chart. This is the weekly, just as we watched on November 6th video. And the last green bar was the last one shown in that video. We were expecting a correction that did take place also as expected. And let's go to the daily chart now and see the broken down price action. Just allow me a second, I'm switching charts. Okay, this is the daily chart for the same Euro US dollar spot. And here we see what happened right after hitting resistance at that level mentioned in the video, after which we were expecting a reversal to come. That is exactly what happened this week. We hit the 38.2% Fibonacci retracement, and now we are heading to the 50% at around the 134.60 level. And that we could still go forward should this happen, of course, to the 61.8, and that would be a perfect match with August 6 highs right here. By that time, a perfect triple match would be to hit the 61.8, matching, of course, as I just said, the August 6 highs, and hitting support right here. We would have a perfect setup for a bounce and resume this uptrend started back in May. So everything is running smoothly according to that video filmed on November 6th, and technically I'm still focusing on the same price action to come. This is going to be all for today. I appreciate you coming back. Thank you for watching this video. As always, should you have any questions regarding technical analysis, just drop a line at alexberkowitz@gmail.com, or just Facebook me as Alex Berkowitz Trader, or just do it by following my email address, alexberkowitz@gmail.com, and you will be able to watch my daily analysis on different markets. Okay, thanks for coming back. See you next week.